Hi there, I'm Edward Kalstian, founder of Egg Capital, and welcome back to the channel. Ever panic when your stocks drop or get overconfident after a big win? What if I told you that a 2000-year-old philosophy could make you a more confident, calm, and ultimately better investor? Today, we're diving into how Stoicism, yes, the ancient philosophy of Marcus Aurelius and Seneca, can help you master your emotions and level up your investing. I'll show you how Stoic principles like emotional control, accepting what you can't control, and long-term thinking align perfectly with successful investing. Stick around to the end, where I'll share a personal experience where Stoic thinking helped me navigate a recent stock market crash. Let's start with the basics. Stoicism is a philosophy that teaches us to live with virtue, reason, and self-control, focusing only on what we can control and letting go of what we can't. It's not about suppressing emotions, but about not letting them control you. Sounds familiar? That's exactly what great investors do. As Marcus Aurelius wrote, "You have power over your mind, not outside events. Realize this and you will find strength." Now let's apply that to the stock market. When the stock market crashes, many investors panic sell. And when it rallies, they buy out of fear of missing out. But Stoicism teaches us to stay calm, grounded, and rational, especially in chaos. Seneca said, "We suffer more in imagination than in reality." When your portfolio is down 20%, the pain feels real, but it's often fear of the unknown that drives bad decisions. A Stoic investor learns to pause, reflect, and ask, is this emotion serving me? And is this fear based on fact or just noise? We need to try to control the controllables. The stock market, out of your control. Your asset allocation, totally in your control. Stoicism reminds us to focus energy where it matters. We can't predict inflation, interest rates, or elections, but we can decide to diversify, stay consistent, and keep on learning. Epictetus said, "Make the best use of what is in your power, and take the rest as it happens." In investing, that's golden advice. Stoics weren't about quick wins. They were about resilience and endurance. Investing is the same. It's not a sprint, it's a marathon. Every time you delay gratification, ignore hype, or stick to your strategy, you're practicing Stoicism. Like when you choose to reinvest dividends instead of spending them. Or when you stay in the market during a correction, knowing that your thesis hasn't changed. I will give you a personal experience of mine. In February 2020, I was on a 2-week holiday in New York with my wife. I was living the life, outperforming the S&P 500, as you can see in my portfolio return of 8.9% compared to 4.7% for the S&P 500 before COVID hit. On my 25th birthday, the New York Bull gifted me a 32% loss on paper. But what you can also see in my returns is that I did not panic and sold off, but held on to my stocks. I believed in the potential of the companies I owned because I understood them. And fast forward to August 2020, and we were back at the same point in February, just before COVID hit. So stay calm and don't try to time the market. If you want to be a better investor, start by mastering yourself. Try to read about Stoic wisdom whenever you can, even if you would read just one page or one of your most favorite Stoic quotes. The mindset shift lasts all day. If you enjoyed this perspective, please hit the like button and subscribe to my channel for weekly videos on investing and achieving financial independence. And let me know in the comments, what's one Stoic quote or mindset you try to apply when investing? Thank you for watching and see you in the next one.